back, my friends. All right, today we're going to chat about should you buy investment property in your name or use an LLC? Now, this is one of the most common questions I get from investors who are just brand new and purchasing a home to either rent or flip. And it's also one that is pretty much misunderstood. So the short answer is, it depends. It just depends. Long answer is, that's what we're doing today. Let's talk about legal protection, tax bases, and when an LLC actually makes sense and or it's just an expensive security blanket. So, hey, I am your favorite Key Realty agent, Annette Marble here, and Mo's back here somewhere. I don't know if you can see his little head. But I help people who would like to invest into real estate without lighting their money on fire. So keep that in mind. This video is not legal advice, not tax advice. Your CPA and attorney still matter. So contact them with big questions that I can't answer. But this will give you clarity before you write those checks and file all the paperwork. All right, let's get into buying personally. First, buying personally, this means your property is going to be in your name and your name only. No LLC, no business entity. That is a pro. Is it? All right, let's talk about that. It's simple, it's cheap, and lenders love it. Most conventional loans require you to have a personal ownership in the property. You're going to get lower interest rates, better terms, and just easier overall approvals. Tax-wise, you're still going to get depreciation. You can still write off expenses, and you still report everything on a Scheduled E. So yes, you can probably invest personally and still get the tax benefit. The cons, however, are liability. If something goes wrong, let's say you are renting it and a tenant gets injured, you got a lawsuit, you've got an insurance gap. Your personal assets could be exposed. That's the trade-off. So think about that. Now let's talk LLCs. An LLC is a limited liability company. And the biggest selling point is it is an asset protection. The property is owned by the LLC and not you personally. And if this is done correctly, your personal assets are better shielded from property in case you have a lawsuit that's related. Doesn't that sound great? Well, yeah, it does, but there's always a but. Here's the reality check. LLCs cost money. You've got a setup fee, an annual fee, separate bank accounts, separate bookkeeping. But, if you don't have a lot of time, just keep that in mind. And lenders, they're not as friendly with LLCs. Most lenders in an LLC means higher interest rates, larger down payments, and a lot fewer options. All right, let me go ahead and let's kill a myth really quick. So an LLC does not magically lower your taxes. Let me say that again. An LLC does not magically lower your income taxes. Most single member LLCs are taxed the same as personal ownerships. You still will have the same depreciation, the same write-offs, and that same Schedule E. All right, he's snorting back there. So you got a little loud back there. The IRS doesn't care about your LLC name. They care about the income and your expenses. LLCs are about the legal structures, not tax miracles. So real tax strategy comes later. Multiple properties, higher income, and advanced planning. So when does an LLC make sense? All right, here's the common scenarios that we can go through to help you understand. If you have multiple rental properties, you're doing a higher risk investment, short-term rentals, flips, fix and flips, partners that are involved, or you've built significant equity, you already have personal assets worth protecting. So kind of keep that in mind. Translation is when you actually have something to lose. All right, for many investors, property is not number one, but quick but important point. Your first line of defense is your insurance. A good landlord insurance umbrella policies are the best. Many investors are better protected with a solid insurance than rushing into an LLC too early. So check out both. What's going to best save you money? An LLC with a bad insurance is still pretty risky. So here's the real takeaway. Buying personally isn't wrong. Buying with an LLC isn't advanced. It's about timing, risk, and strategy. Start simple, grow smart, add structure. When it makes sense to flip all that stuff into an LLC or even a S Corp or C Corp, if you want help figuring that out, that whatever works for you in your situation, especially here in Central Ohio. So reach out. I'm happy to help map you out before you make any expensive decisions or any expensive mistakes. And beware, buyer beware, and know that you don't need 17 LLCs for just one duplex. I'm just saying. So, well, there you have it. As always, we're in and around Central Ohio, and we're keeping it real here in real estate with Annette and Associates, and Mo snoring back here in the background. So good luck with that and have a great day.